Hello everyone. In this particular question, we're going to look at bank reconciliation, and this is majorly focused on college students. It's not for high school. For high school, the questions are a little bit different, so you can go through it from high school. It's the same principles that I used, but the way the questions are presented are different. But bank reconciliation will always be bank reconciliation. Nothing will really change. So it will be benefit you. It will be of benefit to you if you do watch it as a high school student. It says here, you've been asked to help the inexperienced bookkeeper of Chrome Traders to reconcile the business bank account and bank statement. The following information is provided. Right, so you provided the information. Right, the bank account had a favorable closing balance. I changed this because in the question that I was sent, it said opening balance. And normally when you talk about opening balance in bank recall, right, that will be balance at the beginning of the period that you're currently looking at. Let's say, for instance, you're looking at the month of July. You are reconciling for the month of July. Then when you say opening balance, that means you're talking about balance on 1 July. Right, and in this case, the question was referring to the balance at the end of July. That's why I changed it to closing balance. Because if you try to reconcile using the opening balance, it won't reconcile. So instead of the question saying opening balance, you say closing balance. That means the balance at the end of the month after all transactions that the inexperienced bookkeeper would have taken into account is done. So that will be the closing balance, and that closing balance favorable means the balance is a debit balance that is on the bank account. That's a ledger account. That's a ledger account that we're talking about, right? Of 1,198 rands and 3 cents, right? Then the bank statement is a favorable closing balance, and if it's favorable in bank statement, that will be a credit balance of 314 rands and 90 cents. Then the following checks were outstanding. I checked that I was sent to late traders. Then I have a check that I was sent to Anna traders. Then we've got outstanding deposit of 4,322 rands and 65. Then we've rent was paid directly into the bank account of the business by a tenant. Right, this again in the question says by a debtor. A debtor does not pay rent, a tenant pays rent. Right, okay. So let's the first question asked to do the bank account, bank ledger account. So I'll use a T account here. Right, I'll just use a T account of the bank account. Let me use a different color. Right, that will bank account. Right, so you put balance BT. Balance brought down of 1,198 and 3 cents. Right, so because when you're doing this bank account, basically you're looking for items that are in the bank statement and that are not accounted for when you did your journals, that is cash receipt journal and cash payment journal. And the cash receipt journal is the debit side of the bank account, and the cash payment journal is the credit side of bank account. So I've got only two. There is this bank charges and the amount that was paid by a tenant. So this one we'll call it what? Rent. And normally that will go through the CRJ, right? And it's 700. right? So that's rent is amount that, because if you look at this amount, outstanding checks and outstanding deposit, these are basically what is not in the bank statement, but it's inside the books, your books. So here we're updating the bank account with what is inside the bank statement and what will not have been recorded by the inexperienced bookkeeper. So we have bank charges. That's 112 and 79 cents. And then the balance of this account, because those are only two things that you need to update your account with. So this will give you, that's 1198.03 plus 700. That will be 189.8.03. So that will be the total for both sides, because that's the biggest total. Right, then once we do that, we find the balance CD. Balance CD, that will be the total minus the total of the credit side, which is 112.79. That's minus 112.79. And that will be 1,785.24. Then there will be a balance BD. That's 1,785.24. Right, then you do the bank reconciliation. Bank recon statement. It's got two sides, debit and credit. The first thing that you put up there is their balance, is pay bank statement, and that always goes to the credit side. If they say it's favorable, it goes to the credit side. If they say unfavorable, it goes to the debit side. If they say credit balance as per bank statement, that goes to the credit side. And if they say debit balance as per bank statement, goes to debit side. So this is a credit balance that's got to 314.90. Then outstanding deposit, and this one always goes to the credit side. Outstanding deposit, that's 4,322.65. Then outstanding checks, right? We've got late traders. Sometimes instead of writing who the check is going to, they write the check number, right? Which is even better, because if you write 10 checks to late traders, all you know which is the correct check. So check numbers are even better, right? Late, that's 719.99. Then Anna traders, that's 2,132.32. Then balance balance as per bank account. At the balance as bank account now, we use this amount here. Right, we use this amount. That's the amount that is now the one that we calculated. If you are required to cover, but you have given the closing balance, then there's no need. So we use that amount. And if it's balance PD, if it's negative, it goes on the credit side. And if it's positive, it goes on the debit side. That is basically the opposite of the balances per bank statement. So here it's favorable. That is on the debit side, the balance brought down, which is 1,785.24. Right, then when you add these two totals, add the total of the debit side and the total of the credit side, they should give you the same amount. That's 719.99 plus 2132.32 plus 1785.24. That's 4,637.55. Let's add the other side. That's 314.90 plus 4,322.65. Right, so it balances off 4,637.55. So that will be your bank reconciliation. It's as simple as that. Once you know exactly what you're doing, the whole idea is on understanding that when you update your bank account, your bank ledger account, you're looking for the things that appear in the bank statement and not in the ledger account, because you didn't do those, you found them on the bank statement. Then go to reconcile. Now basically we're saying what is it that is we dealt with, that we recorded, but the bank statement is not yet recorded them. So there are three transactions mainly that you look out for. That is outstanding deposited money, but it's not appearing in the bank statement. Then the checks that you already deducted are in the bank account, but are not yet deducted in the bank statement. Then the two balances bank statement, balances pay bank account. Then you reconcile the two. And if you like this presentation, please subscribe, like the video, and turn on your notifications so that you can get notified whenever I post new items. And please share with your friends. Thank you.